What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be taking a look over here at the Bitcoin price chart and the stock market and the dollar, the DXY currency index, and poke around at a couple of different retracements because that's what I'm hoping for over here on the Bitcoin price chart and show you how these things can play out. In particular, we're going to talk about Coinbase or Coin and how Coinbase is, in my opinion, a completely popped bubble. But we're going to talk about the retracement rally that came out in here and the bottoming structure that happened in here before we went off into a 702 Fibonacci retracement. So this may look familiar of how boring we are down here for Bitcoin at this point right now, but to see an alternative structure of how they can play out before they go back to the retracements and then turn over on themselves. So things have been quite volatile just to start this week. We're only on Wednesday. It feels like we've already done a full week with how volatile things are. We had a nice recovery come in late Monday, and then yesterday, Tuesday, it took it all back, including over here on the Dow Jones Industrial Average, dipping below Monday's price levels, still holding this area, but definitely at a level of uncomfort for me. However, we're still holding these levels while the US dollar currency index, or the DXY, is going parabolic, reaching the price levels that were set back there in the C19 sell-off. So that's the level of fear there is right there. And let's zoom in on that. We might have just poked above it right now, and we have now poked higher on the DXY than we did during the C19 sell-off. So this has definitely been a head scratcher for me over here on the DXY. As we all know, inflation is running rampant in the United States. The value of the dollar is depreciating. However, so is everybody else's currencies, and the DXY, or the US dollar, is depreciating at a less velocity than other currencies. So it's like everything is in a downtrend. However, the dollar is in less of a downtrend, which makes the DXY go up. So it's kind of a convoluted metrics in this environment that we're in. However, can't be ignored. Look where we're at, right? This is something I definitely didn't expect, but one has to wonder how long it can continue this parabolic momentum. One of the very first technical structures that a brand new investor learns is a head and shoulders. And when you get a breakout from a head and shoulders, you measure the length of the head. So we can draw out our head and shoulders over here on the DXY, in which we have our left shoulder, our head, and our right shoulder back to our neckline. And to measure a breakout for a head and shoulders, you measure the length of the head to the neckline, and then measure from where the breakout happened right here on the neckline. And as we can see, we got full extension, a perfect head and shoulders extension. Next move for head and shoulders is to come back and back test the neckline. However, we're not doing that, right? So is this more still of a continuation of a range while we're at the top end of the range? That's kind of the big watch right now. We've gotten through all retracement levels here on the dollar. We know that during these moments right in here, this is where we've seen really big runs happen in the altcoin market. Obviously, dollar parabolic at this point. So head scratcher for me during this inflation environment. And with how parabolic it is, you wonder if it's going to reverse on itself quickly, which brings us back to the Dow Jones Industrial Average. And if we are going to see that DXY reverse, you would expect to see the stock market reverse at the same time, which of course, as we pointed to time and time again, would be optimistic for the crypto market. But it's definitely a climatic moment right now on whether or not the dollar is going to stop and if the Dow Jones can hold the level it's at right now. Of course, my thought process is that Bitcoin's not going to set a new all-time high, but I'm looking for a retrace to come out of Bitcoin. And I found this really interesting over here on the Coinbase chart. As you know, Coinbase IPO'd at the peak back in April. So I believe April 14th is the day that Coinbase IPO'd. And I've made this look more like a bubble structure that's happened in here because during all of the pre-IPO buying, you get to load up on it in the $30, So here we are in the mid 30s. You can see that over here. And as you can see, it's as if we could see a bubble occurring. At IPOs, they dump it all under the retail investors. You get your initial fall, you go back to your retrace. Now you're waddling under here, and we're continuing this crash. So I would think that we'll probably see Coinbase back in the 30s at some point. But what I found so interesting in here is that we could see how we were having this waddling happening in here before eventually it just went off and went into its retrace, went back to its 702 retracement, and then rolled over on itself. But in this time period, right, what did it look like? Boring, bear flag, terrible. Actually ends up breaking down the bottom side of this bear flag right in here, right? And then eventually goes off into its retrace. And back in December, I was saying, bear markets are incredibly difficult to navigate. They are very, very hard. And as you can see, anybody selling the breakdown of the bear flag that happened down here for Coinbase would have gotten wrong-footed, and then wrong-footed, of course, buying the retracement, right? And that's what makes Bitcoin's price chart currently so difficult to navigate. In that last week or the week before, saying, not fully convinced that the bottom of this channel necessarily has to hold, because we see them get broken frequently. Like when we look back to the top of the 2018, 2017 bull market for Bitcoin, that we could see that that's what ended up occurring in there as well, right? If you were going to sit here and say, we have to hold the bottom of this flag, or if you're just going to go based on daily candle closes in here, what would have occurred? You take out the bottom of the flag, then you go back into retracements, right? Which is what I've been drawing over here on the Ethereum price chart before it heads back into its retracements, that for an ABC, we typically see the bottom of these things get taken out first before we head back off into the retracements. And for those who are longtime viewers of the channel, I've frequently discussed how I don't really like trend lines because they can get violated so much, and everybody's very lenient on their own rules with trend lines and whether or not they're going to use the candle closes or are they going to use the wicks. What are you going to use to be consistent on it? And if you go just based on candle closes, well, we're already working on that phase right now for Bitcoin. And if you take a peek out there on social media, you've got really, it almost feels like the majority of people are now in the belief that we are in a bear market. It has finally come to that phase where the majority of content creation, social media posts are in the belief that Bitcoin is in a bear market, and everybody's looking for lower prices, right? I mean, it's constant of, 20, it's going to be at 27,000 because that's some cost basis of long-term holders or something, or it's at 13,000 for short-term, long-term basis based on cataclysmic lines that come together, whatever it is, right? Everybody's pointing to the downside targets of taking out the lows that were set back in June and July. And until proven otherwise, I just don't think that's the case. I think we're in a long and a grueling retrace that is a sloppy range before it can finally work its way back up into the retracement levels. Then we can start talking about heading up and then heading on down to those lower targets. But I don't think those mid-20s have any validity to them. I think it's going to go much lower than that. The problem that we're all having to deal with is battling our own patience at this point, and how sloppy is this thing going to be before it gets there? Because you can even see it right in here before it went into its retrace over here for Coinbase or Coin. Just a nasty, nasty, sloppy range before finally just go into it. And very similar to what we're seeing over here is that it poked its head above that 0.382 Fibonacci retracement on Coin, just like we saw over here on Bitcoin. And while it's difficult to figure out how to predict time, because I still have yet to find anybody capable of doing it consistently, it just doesn't exist out there. The one thing that we can do is take a look at the measurements of Ethereum and how long it's taking for its structure to play out, considering it's been playing out identical to what an ABC looks like, even from a time ratio perspective, from what we've seen in crypto before, like we saw back in 2018 for Bitcoin, which would indicate that we would start moving in on that C leg down here in late May. In late May is where we're going to have that horrible, horrible moment. And then finally it goes off into the retrace, right? So you would expect sentiment to be at its absolute worst down in here, and the thought process to be that everything is going to collapse, and then suddenly it reverses on itself. But of course, I would have to expect that the dollar would have to chill itself out, and that the Dow Jones Industrial Average would be willing to hold itself. And we can see it's up almost 300 points now that the market has opened, bouncing up off that kind of 702 Fibonacci retracement that it pulled back down into here after going on that ride. Big fat 702 pullback. It looks like we have a good start to the morning. But of course, I want to see this level really hold here for the Dow to show some strength throughout all of markets, because that's an element that has always been there. And while it seems climatic out there and all that good stuff, this is the structure we were looking for in here. We are still holding retracements here for the Dow Jones, now up 326 to start the morning. We were looking for this pullback to come down in here. We just want to see it hold, right? It's the climatic moment. Please hold. So it's definitely intense, but we know we've seen that before. Even to the other direction, we've seen that it pulls back to the 702 Fibonacci retracement and then eventually reverses. That's where we're at right now. That's where we started today off. So fingers crossed, this is it. This is what I'll be watching for throughout the rest of the day. And of course, watching over here on the DXY to see if this is just a blow off top, to see if we're having kind of a reversal in the manner that we've seen these before, right? So pretty crazy, but Will it still hold itself below its previous high, which was the entire measured move that we did have already measured out? See these things a little bit better if we kind of stretch them out a little bit. But while I'm, not so super optimistic on Ethereum and Bitcoin doing anything crazy, when we look to past history, the more optimistic place to look, I think, is the altcoin market. And we've studied this before, 1, 2, 3, 4, 5 with an ABC correction happening in here. And each of these legs following their rules with a 5, 3, 5 correction, that this is all good. And I think there's a higher probability of the altcoin market being able to set a new all-time high, so long as that Dow Jones can continue to hold and continue to follow the structure we've been following, right? And continue to go bullish, because that's an element we've seen in each market. So watching that closely, but I think this is where the optimism is at. And I think over 90% of my portfolio is in the altcoin market, besides being in Bitcoin and being in Ethereum. I think there are a lot of altcoins that are undervalued, that did not get to go into the bull run. And I think there's a lot of altcoins that have already completed their total bubbles, like Theta and Solana. I think these things have already done massive bubbles. And I think there's a huge rotation opportunity in the market, or at least that's the way I'm playing my cards, that there are still lots of them out there that did not break off and go into massive euphoric bubbles. So it'll be interesting to see how this thing can play out, because I think it's going to be what people don't expect. I think a lot of people got pulled into the things that did 50,000% bubbles and bought into those things. But all my money is in the assets that are not in their new all-time highs from based back in 2018. That's the way I'm positioned. Everybody position it however you want to position it. But that's the way I'm playing my cards. And I think sometimes there's a lot of misinterpretation of, me doing that, right? And to think that I've been stuck in that the whole time. But, I wrote up Ethereum, I wrote up Bitcoin, and I wrote up Cardano. Cardano was my biggest victory so far of this bull run in here, rising, 8,000%. That was a great ride, but I've 65% exited that, and I've rotated it into things that are lower in the market that have yet to go on those big runs. And that's just how I'm playing my cards. After something rises 8,000%, I'm not trying to chase another 200 or 300%, right? When you start looking at numbers beyond that, and people say, hey, we're going to $6 or something like that, $6 from right here, it's 173%. And I think that's the same kind of mentality people get into with like Bitcoin, right? Bitcoin rose a total of 2,000%. And you have a bunch of people chasing 100K, right? A 161% rise. It's just not of interest to me to try to go after that type of thing when there seems to be so much downside risk for Bitcoin to me. So I'm over here hovering in stuff like this saying, hey, man, maybe I can catch another one of these types of moves. So that's the thought process that I go through by choosing things that are still low. I think it's possible that those popped bubbles can do retraces, but I'm way more interested to see how the things have still been in these long consolidation periods that never went into excessive speculative bubbles do during a value run. But again, I'm watching that Dow Jones and looking over here at the NASDAQ. It's setting new lows. The NASDAQ's in a different kind of bubble than what we've seen over there in the S&P 500 and in the Dow Jones Industrial Average. The NASDAQ has been on a different type of cycle that has been going on for 22 years. And we can see how it's gotten really close to that 4.236 extension up there, and now setting a new low today. Whereas the Dow Jones is more based off of the great financial crisis and the highs that were set back there in 2007. So we have different structures here. Definitely want to see the Dow Jones hold in here, because this is a macro element for this market. But watch out for that NASDAQ. It is not looking pretty. And as we can even see here, as the stock market is doing all of this erratic price action out there, even Bitcoin's having some erratic price action going with it, with a $1,000 fall here in the last 30 minutes. So we're teetering on the edge over here for the stock market and for the Dow Jones, and we'll keep our eyes on this throughout the rest of the day. I'll be over there on Twitter if we start seeing any type of major breakdowns or any type of major recoveries. But we're here. This is what we were looking for. We're looking for a big pullback to come down in here. But boy, we need to hold. And we'll see if this is some type of blow-off ending happening here for the dollar, the US dollar currency index, or if this thing's going to get itself a breakout. So I'll be over here on Twitter throughout the rest of the day. You can follow me over there on Twitter at bcbacker. If we see the stock market start to break down, or if we see the US dollar currency index start to break out, I will post those updates over there on Twitter. Otherwise, a high intensity moment out there right now. So we'll keep our eyes on it today, guys. Either this is some pivotal moment in history, or we're at a moment of a reversal. So intense for sure. But all right, guys, that'll be it for this one. I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.